afternoon. I'm Tony Keller sitting in for Howard Green. Well, 2012 was an action-packed year for business news and for investors. It could get even more interesting in the coming year with the so-called fiscal cliff looming in the United States and the need to resolve a fairly long list of issues facing the Eurozone. Joining me to discuss the year that was and the year that might be in 2013 is Alex Drashevsky, founder and managing partner at Recovery Partners. Alex, great to have you here.
Thank you. It's great to be here.
Every time I sit in for Howard Green, you're here, so
there you go.
I'm comfortable. It's a constant.
Stated.
Look, let's start with fiscal cliff. Unresolved issue, obviously on the minds of a lot of investors. Is it on your mind a great deal, or is it noise that you're not all that worried about?
Well, I don't know if that's sort of the correct characterization on either side. I mean, the way I look at this, I'm saying, geez, the U.S. needs a sharp fiscal adjustment. I mean, they've got a structural problem in their budget of about 6 to 7%. So this is not something that should be unexpected. I mean, we need a big fiscal adjustment in the States. Now all the screaming is about the fact that this might cause a recession. Well, you're going to have to go through some type of slowdown in order to reconfigure finances in the States. So, I mean, is this the appropriate mix of tax and spending cuts? I would think you need more spending cuts than tax increases, and I think that's what the big tussle's about. And if they don't get that part of the equation right, then it could affect the economy. I mean, if they tax more than they cut spending, that would, I think, send the wrong message to markets, and that wouldn't be a step in the direction of fixing the problem. You need more spending cuts than tax increases, and you need a fiscal adjustment of about 5 to 6%. If it's going to happen with these automatic cuts, the sequestration, or not, I don't know.
Would that be a problem for you? Because, I mean, most of the people who are looking at this, their assumption is, look, if a series of large tax increases and big spending cuts hit immediately, that's the fiscal cliff. That pushes the economy back into recession. Is that your view, or do you think there has to be an adjustment at some point? Why not do it now?
Yeah, exactly. I mean, from an arithmetic standpoint, you're going to have that adjustment at some point. You got to get the configuration of that adjustment correct, and I don't think the way the sequestration works is it's not giving you the correct mix. But in terms of the size, yeah, you're going to need something of that magnitude, and you're going to need to tip the economy into a slowdown in order to fix this problem.
So assuming that they do come to a deal on the fiscal cliff, which would probably involve some small tax increases, some small spending cuts, you don't deal with the whole U.S. Fiscal problem immediately. How do you play that? What are you looking for investing in the United States in 2013? How does it look?
I think it's going to be tough. It's going to be tough finding stuff to invest in. You've got artificial interest rate markets that are driving equity markets to some extent. You've got this ongoing QE, which is driving equity markets. So you're in an area where valuations are very squishy. It's hard to get a handle on what things should be and where they should be going. But in terms of a cliff, I mean, I think we're heading for an entitlements cliff as well. I mean, you've got huge entitlements problems in the States that aren't being appropriately dealt with. For example, on the disability side, since Obama's been president, we've had about 2% growth in employment. But we've had 15% growth in the amount of people on disability. So you've had huge cuts in personal incomes, you've had people thrown out of work, and the way the economy and the personal sector seems to be responding to this is trying to go for the freebies. And I think Milton Friedman said it best. He says, if you keep handing out free money, you're going to end up getting a lot of customers. And so a lot of people in the States are starting to see, hey, why don't I go on disability? I can't get a job. Why not disability?
I want to come back to something you said about the Fed. The Fed is absolutely doing everything it can to try to prop up the U.S. economy. And so far, that's been pretty good for the markets. I mean, if you're an investor and you've been all in the last few months, you've done really well. Is your view that's going to continue, or is your view that's going to turn around?
No, I think if they continue priming the pump with this QE, it's going to continue goosing stock markets. I think that stock markets are going to continue creeping higher as long as this monetary stimulus is going. And in fact, that's the only positive benefit of this QE. It hasn't really acted on the economy in any meaningful way, but it has acted on stock prices. And I expect that to continue. I mean, they keep goosing money into the system. It's going to find a home, and stock prices are going to continue to creep higher.
Let's talk about the other big macro crisis that I feel like we have discussed pretty much every day over the course of 2012. That's the European situation. Similar story there, where markets since the summer have gone up. There has been renewed confidence that the Europeans are actually making progress, even though the economy's not doing so well. How do you invest in Europe in 2013?
I think Europe's a much more difficult nut to crack, and in Europe you've got a lot of cross currents happening in 2013. For example, Merkel's up for election. Big change potentially there. You've got the Italians going into an election. Monti has stepped down, and guess who? Berlusconi's coming in from from left field, potentially to run the place again. That is extremely worrying. You've still got problems in Spain. France, the economy there isn't doing very well, never has. I mean, they haven't run a surplus on their budget in 40 years, and their debt's continuing to grind higher. The UK seems to be re-entering another difficult period here, and the entire zone is flat to negative growth expected. So I think Europe is a minefield right now, and none of the problems that we've been discussing over the last few years in terms of the debt situation there have been resolved, and it doesn't look, on the basis of where we're going in the short term, that there's any serious effort being made to resolve those issues. They're still papering this stuff over. They're still kicking the can down the road and hoping for a better day. So that's not encouraging at all.
I want to ask you about Research in Motion. Obviously, Canadians pay a great deal of attention to this company. When the earnings came out last week, at first the market liked it, and then the CEO opened his mouth and explained that there might be some challenges going forward with services revenue. That stock went down 20-something%. Any thoughts on Research in Motion as we head into what is going to be a very big year for RIM with their new BlackBerry 10s coming out?
Well, we're involved in the distressed area, and I think RIM is a distressed company. I think that they're facing a lot of headwinds. They've got extremely stiff competition coming in from some of the other producers, Samsung, Apple, and so on, are continuing to grab market share away from RIM, and particularly in the business segment. And to me, I think the look for RIM is extremely cloudy. I would characterize RIM as a fallen angel.
I want to ask you one final question, big picture. If you only had to pick one area to invest in 2013, that could be a sector, that could be a country, it could be a company, what would you pick?
Precious metals. I think precious metals have been dormant for a while, and I think they're going to grind higher in 2013 as it becomes apparent that there's no way out of this fiscal problem. There's no way out of this debt problem in Europe except to continue printing money. And while that sentiment hasn't really leaked into the precious metals, the inflation expectations, I think 2013, if I had to pick one theme, it's probably going to be in inflation expectations and precious metals going up.
All right, Alex, we'll leave it there. Thanks for being here today.
Thank you.
That was Alex Jershevsky.
Happy holidays.
Happy holidays to you too, sir. Alex Jershevsky is the founder and managing partner at Recovery Partners.